Okay, traders, ready to go. Welcome everybody. Good morning, Alan, Oliver, Tibor. How you doing, traders? So today we're going to talk about chart patterns using also order flow. I'm over here trading in the Republic of San Marino. If you don't know me, I've been using Bookmap for a long time. I started trading futures and Italian equities back in the days, end of 99, starting 2000. I'm 41 years old. Since 2017, I started trading small caps with Smash the Bid. And then I created my community where I teach and mentor traders on futures, stocks, and options. Over here, there's next to me a professional trader, Mahaber. And also I'm teaching right now my wife in the academy that I built over here in San Marino. So I started working with Bookmap back in the days as I found a tool for confirming of my trading. What I mean by that, I always look to improve my trading, okay? For example, this morning, I had 3 main setups. I didn't trade big caps yet. I almost didn't trade futures yet because I'm waiting for FOMC at 2 p.m. And that will be a pretty important news. So every single time that we have FOMC, it's generally on Wednesday, I tend not to trade because I simply want to wait for that moment. In that moment, if you really trade the levels, you can make actually your paycheck of 1 month. And that is true. We had over here this morning Tesla, HOTH, LLAP. I was looking also Amazon and Nvidia. This stock, LLAP, is a small cap. We can see it over here. We'll put some zoom for you traders. Okay, there we are. We have a stock with 99 million float. So even if it's a small cap, because it's 240, 250 million float, it's still not one of those small caps with 5, 10, 15 million float, which are my ideal ones. This is a stock with 100 million float and has an institutional of 44%. We have also stats. So over here you can see I'm using JTrader. We have a stats that we had a previous gap and it closed right on the day. So this morning my intention for the whole room was one, looking to short this with size. And the reason why is that I start looking at the previous moves, previous gap on the stock. I start looking how it evolved, and this was the previous gap that we had. And I wrote over here, hardly they can hold before 8 o'clock, daily level here. So we started shorting this. And what does it mean hardly can hold the 8 o'clock level? It means it tends to fade pre-market and it tends to find a high of day before 8 o'clock. Today was a perfect example of this. So we're gonna put over here a 1 minute chart. We had the level of resistance 390, and then you can see over here we started topping and simply unwinded. Okay, I'm gonna put over here this template. You can see 8 o'clock, sorry, 7:15 over here. 8 o'clock is this point, and then the fader. So this means that by using stats, it's not that simply no, okay, I'm gonna trade short whatever level, but I'm gonna trade short because I have a daily level, because I have Bookmap confirming the timing, because I have the setup of my strategy, and also it's a good edge to see what happened in the past on the stock. So this stock, what happened? It closed red on the day on the previous gap, where we traded around 21 million volume, and it faded before 8 a.m. Okay, so that is the edge for me to take this short. And all morning I was looking this to short, looking this to short. Now looking at Bookmap and where this comes to be useful. Look at this point over here, okay? We start breaking the 7 o'clock level here. This is the high of 7 o'clock. We start breaking it. And the first thing that I do when I have these runners, I look for the daily level. Now, there are two main ways to look for a daily level. One, I look at the daily level and on a daily chart, and I look for those levels that where the price rejected or bounced multiple times. These are called point of intersection. Okay, so one chart pattern that I look is point of intersection. Remember, essentially is a point where it was touched for a reversal, can be long or short, multiple times. At least I want that it's touched 3 times. Then I have also daily levels where we have traded high volume. Okay, for a small cap high volume, I will refer to anything above 20 million in these market conditions. Second thing, so after my daily levels, I start looking at Bookmap. So we can see this morning, we can trace our trend line, okay, from the low, okay, from when the gap started or even the previous day close, and I can have over here a first level of reversal. Now, 2 main points I want you to focus on. We have this main resistance. You can see here, price was around 675, 676, 665, 666. Sorry, 365, 366. Unwinded over here, and I shorted this point, and I got stopped 4 cents. I short even the previous resistance over here, and I took a stop of 12 cents. So essentially, I was looking for levels on the daily, but I was also attacking short with a starter position, so not full size loading the boat, because I had levels of heat map. Those levels give me a low risk, because if I short into resistance, I can simply have a tight risk. You can see here. Let's go get that level here. Okay. I mean, this is perfect, right? I look for the level here, I start shorting below, and then you can see over here the dip, start pushing, and over here I get stopped. The same thing happened here. So I was aware and I was explaining to the traders I teach, I'm taking over here a starter for beginners, for traders in the room. I said wait for a trendline break and rejection, which is what you should always be looking for when you're trading extension plays or pre-market plays. And I started shorting over here. At this point, you can see the trade started to work. But then we had right away over here some buyers. You can see that they stopped to sell, right? They stopped selling over here. Then they start like curling. Buyers, I don't see no more sells, and I got stopped out over here. Basically risking this heat map. So these red levels are heat maps. What it tells me that this level, they were placed 39,000, 40,000 shares to sell, okay? So now we don't know if it's a short seller, multiple short sellers, or are only longs that are selling their position, but we know that this was a level of liquidity that we can risk into. The shift over here from bullish to bearish happens over here. Everybody can see, traders, this level of trend line over here. Okay. All right, so this level here is a trend line, but how many times you take a trend line and that trend line doesn't simply work? You take maybe 2, 3, 4, 5, 6 trend lines, and every time you complain, this is not working. This is just like another stop, another stop, another stop. So the point for me was to look at the trend line. But when I see this trend line, I want to see a rejection. This pullback after the trend line, okay? This is the chart pattern that I'm looking for. So I want to see exactly the level over here of resistance. Okay, this is the level of resistance here, 380. Remember, 390 is the daily. We have a breakdown of this trend line, but this trend line over here doesn't confirm that we're going to have an unwind. And what I want to see a reversal to the upside and then a rejection. This is the pattern, right? So, and you can see over here, there's really a shift. If you analyze the dots over here, right? Let's just try to push it like this. So static configuration. We're gonna put over here the volume dots. We can put the size. Okay. Now you can see that, can make even bigger here. Okay. Look at these dots over here. The front side of the move is with major blue dots, correct? And then over here, you can see up here, you can see that we start shifting from buyers, sellers up here, trend line break. You can see that we have big selling pressure. It pops, this time pops into a new level of liquidity. When I say level of liquidity, means that we have resistance stacked here at 375. And then after this, you start to see over here sellers. Now don't look at the zone over here because it's 8 o'clock. We have all the data coming out from the brokers, the back orders. What I want you to focus on is really the shifting momentum from the buyers here, the sellers here. And this is really what you have to look for, okay? Buyers versus sellers. Once the open comes, it simply unwinds over here, straight down, no major pop, low liquidity. And you can see over here, came down directly to the 258, small pop now, a few minutes ago, and now it's sideways. We are short at 358 today, explaining this in the room. And we're holding traders for a main target today of $2, $2.20. Now, we have a high institutional, 43%. So this is one of the reasons where I'm always careful. I always look that the stock is continuing to make lower highs, lower lows, because when we have a high institutional, they often tend to hold the stock higher. Okay. We can look also over here at day two. Day two, we have a close in the past above the open. Day one, so the previous gap, it closed below the open with the average high of day came 930 and with a very small pop, essentially just like today. So for now, if we measure the previous gap and today, they're the same. Okay, so until we're gonna have this lower high, lower low environment, we're gonna hold over here for a short. I'm gonna do like this 1 second. This is on a 3-minute chart. So you can see even on the chart here, we had a major trend break. Once we broke the trend line break, we started to see lower highs, lower lows, and now I'm still making lower highs, lower lows. Okay? What I do is I look always at the sequence of lower highs, lower lows. So here, then I put one over here, then I put a one over here, one here, and then we had one over here that was breached at this peak, but now still unwinding over here. So we're gonna see if also we're gonna make lower highs, lower lows. Okay, very interesting stock this morning, LAP. What other stocks have you traded today? So Tesla, HOTH. Okay, we can go on HOTH that I have over here and also Tesla. Let's go first to HOTH. So this is a stock that I trade a lot in the past, and you always have to be pretty careful with this, especially today that we have an SSR. Why? This stock has a very small float, I call it micro float. So generally I call micro float anything below 5 million and nano float anything below 1 million. So this is between nano float and micro float. We have a stock with SSR, so means under short sale restriction. This means you cannot short on the bid, you have to short on the ask. And when we have this kind of scenario with high volume, which is the volume that we had over here this morning, you can see, it tends to run. This morning we had a level of 375 on the daily chart. I was looking for that three. Let me see perfectly over here who was 375. Let me double check. Yes, we are looking for this level over here. You can see this previous resistance, 375, where we traded also some volume, around 8 million. So we had a small gap this morning, extension over here. We're gonna put a 1 minute chart. And then we're gonna dive into Bookmap. So I'm not short on this stock. The reason why is that we didn't touch my daily level 375, okay? So I was looking at 375. I know some traders in the room took it. And I would say even pretty good. This is Mo over here, taking HOTH on the backside, so beautiful job. Beautiful job. You can see over here, backside of the move. Personally, I didn't take, as I said, I was waiting more than 370, 375. We had a push over here with a pattern that I call it J-Slim. Bull trap over here at 365, and then we start to unwind. Look at Bookmap. So, and we can do the same thing as before. We're gonna go over here, studies, and I do this to make you understand really where's the shift between demand and supply. Okay. So look at this. Over here we have 940. Down here, we're gonna circle this. Now that red line is a VWAP. Almost always on SSR stocks, before a high volume push, we have this pattern. This is like the loading pattern where big hands, smart money, uses to accumulate trap over here two ways. One, they're trapping the short sellers, because short sellers over here on a breakdown, they will start to join the trend. Okay, so of course they will place themselves on the tape, on the book, they will short the ask, and they will get filled, and they will look for this unwind. On the other hand, we have buyers that below this level of 330, 325, just because it's below the VWAP, they will step out. So remember, we have a scenario where 940, 945, we are below VWAP, okay? And this is a common type of manipulation that I look in the market. And right away, when we have this reclaim, this is a type of manipulation that happens generally in the first 15, 20 minutes. We have a bear trap deal and curl. We have over here a main push, and you can see this volume, right? So we have only buyers over here, or the majority of buyers. Look at the structure. We have over here the first breakout, this level. This is 350. Second level over here, we have 360. And then at this point, and then at this point, look what happens. Another J slim, right? So essentially, imagine over here to have this line. You can see that we have buyers up here, a lot of buyers at this peak. They're trying to break over here the 360, 365. So they're looking for that push. But we have sellers joining in. Right away on this bar, you can see this is a spike. We start seeing over here more sellers, and then more sellers, and then more sellers, and then more sellers. So I call it, this pattern is called stair step down pattern. Okay, it's like a stair. Somebody is bringing down over here the liquidity. So it's like smashing over here all these tops. Every single time that we have buyers, like over here, we have dips again. Somebody is smashing the top. So somebody is selling constantly over here. Somebody over here wants to unload, and therefore you can see the all unwind. Okay, so we saw before on LAP, first a stock that ran a couple of bucks, wait for the trendline break, and then you start looking for those rejections to enter short. Here we have a different scenario. So it's not a pre-market trade, it's a trade after the gate. We're looking into the supply areas on a daily. Then we start looking at where we have the shift. And in this case, we see that longs are trapped on this J slim over here. This is also a bull trap. And once the longs are trapped, you can see the liquidity over here that shifts down from this 365 down to 360, and so on and so on. So this what does it mean? Sellers are taking over. Okay, is it clear, guys? Button, Tibor, Greg, Alan. And by the way, Tibor, no, it's not coffee, this. Makes sense, guys? Any question on this? I wish I have it over here next to me. Not yet. Good morning, Rob. Good morning, Marcine. Okay, so two main points over here to trade these small caps. I traded in my life much before in small caps. I traded big caps, and I was trading European stocks, mainly Italian stocks. And this 99, 2000, if you are from Italy or Europe, you know Tiscali, Biscom, ePlanet, all of these stocks, Fiat, Mediobanca, Mediaset. And I started to trade big caps later in the days, and then only in the last 6 years, small caps. And I found them, I would say, very attractive for two main reasons. One, there's always something new to learn. So I like the idea to trade small caps together with big caps and futures. Second thing is that you have a niche. So I run stats, right? And before I told you, today I'm going to talk about chart patterns, and we already covered two main chart patterns. So the trendline break and rejection, and the stair-step pattern right here. And when I'm talking about stats, I like to run easy back tests, you know, nothing like fancy for now. We can do another lesson at a time. So I go here in history, and you can see still how it's unwinding, right? HOTH, look at the sellers. And I start looking in the last, over here I can choose my filters. So I can make from the start of the year. So we're gonna select from the starting of the year. So we put 1st January. Okay, we're gonna put stocks between 1 and 15 bucks. Gappers, I prefer gaps above 30%. Institutional, less than 30%. Day one volume, at least around 3 million. We're gonna put over here market cap 500 million. Okay, so less than 500 million. And this is a essentially very basic back test. Okay, only to analyze what what to look for. So look at this market. Okay, why I started trading small caps? Because now we had a 73%, 72.61% of stocks that on day one, so imagine a big gap like LLAP, like HOTH, has to be above 30%, okay? That they close below the open. So they open at 3, close 290, that's a red close below the open. 72, almost 73%, so 3 out of 4 basically, they close right on the day. Tell me if that is not an edge. That's the reason why I trade also small caps. Otherwise I will simply trade Tesla, Nvidia, Amazon, BABA, BA, and company. The reason is that you have an edge. So once you find the timing, trading small caps is very easy. Okay, guys, makes sense? That's the reason why I'm looking at this. Questions? Soon we're gonna talk about this Tesla. Think also, I would like over here to have Paul explaining about the stock. He shorted this around 201 and he took it down to the 192 with 3 ads. Not a bad play, not a bad play, okay? This means applying strategy and rules. So Greg is asking, I tend to move my dot sizes around. What's the perfect size during the trading day? I like to have them small, buddy, because like this, I don't really understand too much. So I like to have them like 1/4 of this, like here, okay? And then I focus honestly on the levels and how the price reacts to those levels. This was an example to show you really the shift from, you know, big buyers here, and then once we failed sellers. but generally I have it like this, 1/4 of this here. Just where I finish the E, I have this. I like to have it like this. Okay, why? Because I can see the price section. Essentially, I'm looking at the price section. You can see how it rejects this level up here that we have. That's enough for me. Okay. Julie, I don't know that either. This morning I saw a lot of traders, first of all, going again trend, and second, fighting the volume. Okay. And in some way, this is, you know, always the human nature, trying to find the perfect point of entry, the reversal, being always right. I'm not. I try to always look for the trend. I may look for the top or the bottom as well, so shorting the top and buy the bottom. But the main size, I'm gonna put it, if I'm shorting back size, in the main size, if I'm long, I'm putting on the front side of the move. Okay. And when I see a strong sector, I tend not to go against it unless I see the overall sector starting, you know, to be weak and show me a pattern to short. Now, Tesla this morning. Anybody traded Tesla today? Tibor, Rob, Tello. See anybody traded Tesla today? So Lambo traded. Tibor scalp. Alan traded. Michael, good morning Mike. Michael traded. Okay. So let's look over here. Let's take the trade of Paul this morning. And let's also look at Bookmap. Okay. So I said today why I was not going to trade big caps. Essentially FOMC. I prefer the trend at Reveal being a good trend, but I prefer to wait the day that we have FOMC for 2 p.m. So I will be here today. I mean, not on Bookmap, not streaming for 5 hours, but I will be over here today trading this. I'm teaching my wife only to trade Tesla because she told me that she wants to become a trader. And I said, you need two things. One is patience to learn. Second is a lot of sacrifice, because you will do a lot of errors and you have to correct those errors. Okay, so that will require a lot of time. But if you have these two, I would say, parameters, if you have these two qualities, if you have determination, if you have resilience, so if you want basically to improve your trading, become a trader, I mean, what we're teaching really works. And you can see with the work that Paul did this morning. Now, I told my wife every single day, you have to start your plan from essentially a bigger picture. And I'm gonna bring this up. So we're gonna review soon the trade on Tesla, but I would like over here that everybody puts a little bit of attention on this. So I have, let's say, a stock. Could be small cap, sorry, it could be Tesla, Amazon, Meta, Google, Nvidia, whatever you prefer. My main ones are Tesla, Meta, Amazon, Google, Nvidia, Apple, not lately Apple, but they used to be, Baba, BA, Bidu, Bind, not too much AMD. I never liked that much. So these are the main stocks that I trade on the big cap land. I remember back in the days when I was in day trading university, I'm talking about 2003, 2004, we were trading like Cisco, CSCO, Win, and all of these. It was really a different market trading those big caps over there. So day trading routine, big caps. First of all, read the daily economic news calendar. I don't want to give here any, give publicity, but there are a lot of websites where you can see the daily economic news. And the one I use is JTrader. Now we're going to implement also this and much more soon. The levels are very important, but before I like to read the economic news. Why? I need to know that today at 2 o'clock we're going to have, for example, the FOMC or other news. Then I start looking at the news of the stock that I'm interested in. So focus on the news upgrades on press release stocks. So we'll have a scanner with those stocks that are gapping up. Now, when you have small caps, you'll look for gaps above 20% at least. Then, if I'm looking at big caps, you cannot keep 20%. You won't have almost anything on your chart, right? So what does it mean over here? It means that you have to lower this to 1%. Now, before proceeding over here, this is very, very important. You can use multiple news sources. I don't care which one, just read the news. It's very, very important to read it. Then it doesn't mean you have the news, you have to trade accordingly to the news. Because I always say that volume, price action is the lead indicator. Then find the main levels of supply and demand on the weekly chart. So on the weekly chart, I start looking at support, resistance. Okay, supply and demand is just like a fancier way to say support, resistance. Confirm the main levels of daily with confluence. What does it mean? Weekly, daily, if they're showing you one level, that is a level of confluence. Okay, so you have the multiple time frames that they tell you this is a good level of resistance. Then look at the weekly high volume profile node, HVN. If you run volume profile, I made a video I think in 2016 or 17 with one of my friends. You can check out on my podcast. We explain 1 hour of volume profile, 2016, 2017 on my YouTube. Find the level of pivots that could be in play on a day. So I use very simple pivot points. I study all the type of pivots, Camarilla, you can put the Woodies, you can put like the SV, all the different type of pivots. I just want something basic. If you had today Tesla and yes, you could see how those pivots were very, very important, okay? Find the levels of pivots that can be in play, then shift to a 4-hour chart, find supply and demand, 1 hour and 5 minutes. So it takes time to make a really precise plan from weekly, daily, hourly, 4 hours, hourly, 5 minutes, and then depends if you will trade on a 1, 3, 5, 15-minute chart for the day trade. Important, and not a lot of traders do it, find the institutional levels on your chart where buy and sell stops can occur. What does it mean? Tibor, Mike, Alan, do you know what does it mean this? Or how to find these levels? Nico, how to find the institutional levels on your chart where buy and sell stops can occur. What does it mean? I really want to see traders, your thought process is important. So what does it mean by that? Okay, I'm going to share with you this. So we have over here Tesla, okay? I'm putting over here yesterday. And look with me. High liquidity, It's not wrong, but you need more. So where you think that if you have a ton of, let's say, liquidity, a ton of shares or contracts, if you're trading options, you're long, okay? So you bought calls, you bought shares, let's say at this price at 204, or yesterday, let's say, or days ago at 200 on Tesla. And you're looking for a level where you will want really to sell and unwind over there. So unload your little boat. You have to create an environment or wait for that environment where there will be enough demand to support your unloading. Okay, so you are, like over here Alan said, an aggressor. You are smart money. You have long, let's say over here. Now the levels where the traps can occur are breakouts or breakdowns. Very, very easy. So what do you do over here? You're gonna simply look for a level of breakout, in this case like a pre-market high, and then on this level we know it can occur what? A bull trap. Okay, so it can occur over here what I like to see on a reversal FFT mode over here. Okay, so fill follow through. So the levels that I say always, look, the levels where it can occur a trap are the levels of breakout or breakdown. Okay, this is very important because it's an aspect in trading that not too many traders focus on, but I can tell you that if you start spotting those levels, your profitability will increase. Okay, write down the possible intraday scenarios, setups for the trading day. So what I told to my wife is this: you have to take your 5-10 minutes and write down your plan. Don't write only I want to be long or I want to be short. You have to write multiple plans, like you want to be long if, you want to be short if, you'll be long and then reverse to short if. So by doing retrading modes, by doing analysis over and over and over, you imprint in your mind, you prime your mind with all these different scenarios, so that when you go to trade, you exactly know when something is happening in real, how you can start to, I would say, counter-react to the new scenario that is forming. It's like if today I started trading long Tesla and I'm simply stubborn with my plan. I don't have a plan if things change. I only have a plan if things go long and go in my direction. No, you have to have a plan for long, a plan for short. You have to have a plan if you're long and things reverse to short and vice versa. So that means write down the possible intraday scenarios set up for the trading day. Okay, not one plan or two. I generally generate between 3 and 5 plans, and I know exactly the setup that I'm going to trade. And if that setup is reversing, if something is changing, I know exactly what I'm going to trade in that moment. Yes, Alan, this is what I share basically in the room, but let me see if I can bring up one. So for example, this is from yesterday. I was looking at Tesla. I have a simple plan to look for calls in this way or puts in this way. Of course, using the strategy that I teach. When I'm then trading during the day, you see my stream, you see my charts. And if I'm long, let's say with this plan and buying calls, in the moment that I have the reverse scenario, I start explaining why I'm changing the plan and what plan I'm looking for. And then at 9 o'clock, 30 minutes before the open, I run pre-market streaming where I explain my plan. Okay. Having a bias, I think, is a double sword that always can go against you. I don't like to have bias. I only like to have volatility and liquidity. For me, like, you know, when you go out, traders tell me, or people tell me in general, oh, today was a bad day, you know, like if the market went down, you lost a lot of money. No, because we can trade short and I can buy puts, and I just need that we have liquidity and volatility. So I don't really count that. Okay, now that we had made our plan, this was today Tesla, okay? Look over here, traders. Who trade Tesla knows why this, I would say, maybe for all, is the most volatile stock to trade right now. I mean, there are days that this can move 10 points. Other days this can move 20 points. So even at 10%, there's a lot of liquidity, so you can always get filled. I like over here the fact that it really works good with my strategy. If you know, my strategy is based on chart patterns together with Bookmap, okay? So over here, we had a morning wedge, and often we have this morning wedge. This is the open, 9:30. Often we have this morning wedge, often, okay? So really start looking at this. For beginners, I don't really tell you to trade open because it's often very fast. You can have a lot of fake outs. Mark will drive you first long and then short and then right away reverse. Wait for a direction and try to find the bigger picture pattern on your Bookmap, like I did over here. Then this morning we can see this push, and I'm gonna bring up again the chart over here of Paul because I think that he couldn't trade better than this. Now, for me, trading good means also scaling out correctly. So I don't know over here how I scale out, but we're gonna look at his entry. So as we said, we're looking for levels of pre-market where we have resistance. I'm gonna bring this over here. Okay. We're gonna look at level pre-market where we have resistance. And once that play, okay, so once our stock goes into a pre-market resistance, often we can have a reversal if we're trading the first minutes on something volatile and liquid like Tesla. Now over here, I'm trying over here to put a little bit of, okay. All right. So let me cancel this. Okay. So you can see over here wedge. Price goes to 200. Key area. Everybody's looking at 200. 200 is really the level where above consolidation, we push. Below rejection, we unwind. What it does over here, it pushed, right? And you can see that at this point, we don't have many buyers. So what I did before, remember what we did? I was looking at those dots. Okay. So let's, okay. You can see big buyers over here, main buyers, break of the wedge, break of 200, flips over here to the 200 again, lower high. You can see sellers, right? Look at those sellers over here. We don't break over here the 205 or the 201. We start being weak. And when I say weak, means that we're breaking down again the support of 200, previous resistance. So this is the level. Once we go below this level, we start over here having another small wedge. You can see over here, contraction. Okay, so I'm gonna do this, and this. Another small wedge. And then you can see who's in control over here, sellers or buyers. Tibor, who's in control over here, guys? Sellers or buyers on this one over here? Once we fill the 199, the majority of these dots are sellers. So sellers are in control. It's exactly the fill that we have over here. You can see the fill that we have at this point. And then you start simply looking for the trend following, and you can see big sellers here and big sellers here. So this fill of support, okay, and this fill of 195. This is what I like to trade. Okay, this is the trend following. And then over here we can see that we establish into this 192 main support, and we start bouncing at this level. Okay, exactly, sellers. So let's see over here, question. Alan, how do you know which instrument to make trade plans on? I have my usual 5-6 main stocks that I trade on a daily basis. So those will always be in my plan. Then I start looking for small cap instead for the main gappers with certain parameters. Could be 20%, 2 million volume per market, or high institutional, low institutional, high short flow, low short float, SSR on, SSR not, half. So many of these stocks. And then of course I have always NQ and CL, NES with me, okay, on a daily basis. So for who trades the futures over here. Okay, but over here we can see a good play on from today on Tesla. Now let's see this play over here. It's on HOTH, and I'm just posting it over here how it is. Egal. So let's see what this trader is saying. The first short was 1/5 size because I was not sure if this was the right one. And as a matter of fact, he shorted front side. Okay, so it's very important over here to understand also the errors. After the extension to the 360 area, I shorted on those stoppings, tails at 362 and 364 full size. Not so happy with my first entry because I have a small account. So the first thing that I always like to tell you is I have feelers. So let's say I want to take 10,000 shares on a $3.6 stock, okay? Try to have an hotkey or use the window of your broker, whatever, the window level 2. But otherwise, try to have a hotkey for really a stupid size. Let's say you want to trade 10,000 shares in a day, have an hotkey for 200 shares. Because almost everybody, unless you're really systematic and you're just like pinpointing and tracing the level and you're waiting for that level, you will start shorting earlier. And I tracked, among all the traders that I mentored, one of the most common errors that traders do is anticipation. Anticipation is one of the main fails. It happens even to me. So what I do, I try to be patient, and when I want to take a starter, I have a very, very small starter. Let's say I want to trade 1,000 shares, I will have like a 50 shares starter. Okay? Just like to wet your feet to get like a taste and a feel of the stock. Then when you have the setup, you trade it with relative low risk. So we already watched over here HOTH. Now let's see what the trader is saying. The bottom line, nice green day. Can't remember my last red days, thanks God and Jay for that. In the end of the month, I'll post my February broker trades and made more than 100% on my account, JTrader. Thank you, buddy, but I'm here only to teach you the strategy. This is because you are a great trader and you are putting the hard work in. So props to you, props to you. So let's see over here, shorting the top, covering the dips. This is a perfect way to trade. Yes, start over here. Let's start always small. Again, before, if you were over here connecting us on HOTH, we've seen all these levels over here, okay? So stair step down pattern. Big heat maps here, more heat maps over here. This means sellers, okay? Let's do like this. So I would say, explain better in this mode. We're gonna do this. So the main patterns that you can see over here in Bookmap are these. So let's do white and white over here. So over here, this, and then I will write over here explanation about it. Okay. Then next we can put this. So over here we have the liquidity, at 365. And then over here what we have, starting off stair step down pattern. So we have essentially smart money, diluting. I use diluting to say they're selling over here. And then over here we have more pressure off the stair step down pattern. Okay, and then over here continuing smart money, topping out, action, and unwinding. All of this, okay, so if we see all of this, all of these nodes, all of these liquidity areas are not present on the front side of the move. Okay, so we're gonna make another one over here, this time red, let's see, here. Over here we're gonna write front side of the move. Front side of the move, no major level of liquidity on ask. Okay, so very different scenario. Is it clear, traders? Any question on this? All right, so 11:20. Let's see if we have more questions. So Alan's saying, I have an idea, but why don't you want to trade today because of MNC? It's a Fed minutes. No, I just want to, because I have experience about the market on the Fed. I traded some, so I'm short on LAP. But my point over here is to help today members, also on Bookmap. And I'm looking for 2 p.m. to trade. So staying over here for the main data, the main news. Let's see if we have a few more members. Okay. All right, I think we're set, traders. So remember the setup we traded today, stair step down pattern, that trendline rejection with the heat map, so totally different than only a trendline break. And also we could see some example LAP, HOTH, Tesla. Again, hope you enjoyed the session. If you need help, reach out, Jtraderco. I'm mentoring traders, bringing them to success. We have a lot of real traders with us trading the room. Again, see you next week with Bookmap. Reach out, take care, use your stop, and good luck.